Hey everyone, this is Michael, and this is the Stock Picks video for February 20th, 2022. Before I start, let's go through just briefly the disclaimer that the content and information in this presentation is provided for educational and informational purposes only, and in no way should be considered investment advice. So we'll keep this video pretty short just because there really isn't a lot going on and a lot of change from last week. I'll just go over quickly the current market environment. We'll go over our current position. It's actually a position now. We only have one left. And the ready and watch list review. So let's get right into the current market environment. This is from our daily update on Friday. And we still continue to be in the stock environment risk level of red. There really is just not a lot going on in the stocks that are trying to break out of the cyclical areas and oil. They're just getting a lot of selling. The sellers they're coming in during the day, and we're getting a lot of what we can call a wick, where it's some point during the day the market makes a nice rally, and by the close it sells off. You can call it, for candlesticks, it's called a reverse hammer, and now you've got some resistance sitting there, and it makes the chart not look very well. So that's been going on more and more. There's very few stocks just kind of break out and head out. So it's a difficult trading environment. It's really not easy to make any money. So that's why we just are more watching things than actually doing any trading. I think we lost 2 stocks out of our 3 during the week to volatility, and we got one left who's now underwater. So you can see on the bottom here, we're really not going to buy any more positions. There's no point. Why would you keep adding to losing positions? I think our last 4 trades or so have all been negative. So we just have to be patient. I've written about this. It's just not an environment to really conducive to making money. And we're in this to make money, not just to have trade for excitement or other things, which sometimes happen with people in the stock market. So we're in this to do well. And so we're going to just be hanging on there. So let's go ahead and take a look at this is just a typical trade stock environment that we're seeing these days. It doesn't have the wick, but this is really, I mean, you can find dozens of stocks like this. Morgan Stanley, this was one in one of the leading groups. The whole bank sector was heading higher because of rising interest rates. We had a nice little base that formed here. We actually started getting some tightness over here, which we like, and it kind of, the volume came down, all these things we like to look for. We broke out of this consolidation. We didn't break out of the base. You can see it on the green lines here. At first, we formed a little handle, another great sign. So if in a good market, we would have been buying when it broke out above this area here, and we would have probably been adding to it as it broke out here on this day. So this was set up, and in a great market, this really would have worked well. But immediately sellers came in when it tried to make a new high after all these highs over here, anywhere above 106, the sellers came in. We had some gaps down, which is not a good sign. It got support, and then it just came ripping right back into new highs. And then another big sell-off. And now we're getting a high volume coming in here too. So all in all, this is just, you get shaken out. You try to buy the breakout here. You made a little bit, not enough to actually take any profit. We're talking 5%, if that, maybe just 3 or 4%. You're out because this probably would have kicked us out at a loss, and comes ripping back. Now you're not in it, so you're watching it. Maybe you try to buy it again, or even if you didn't get shaken out, you would have got a little bit more gain, and then definitely would have been out probably over here. So this is what's been going on. In a good market, this would have just taken off. You wouldn't have had all this. You would have had a breakout here. Very frequently, they come back and test the breakout. That's normal action. And then they had higher. So you wouldn't have had all this business going on. So this is the market we have right now. So we just wait until the market improves. Again, none of this is really, it's normal after such a massive run we had in 2020 and 21. And of course, a lot of excess is built up. So for us to have a more extended correction, that would be normal and actually very healthy. But the market's going to do what it's going to do. But right now, we're really not getting a lot of setups and good bases and all that, so we're mostly on the sidelines. The final thing I'll show before we get to the charts is this is the percentage of NASDAQ stocks above the 200-day moving average. The bear market continues. We're still not even at 20%, which means 80% or below the 200-day. That's just a pretty ugly bear market that just continues to go on, and it's been going on for a year. So you can see, really, under the surface, not a lot of power going on, mostly selling, and that's where we are. So I'll be back in just a second with the charts, and we'll go into our list. Okay, so let's start with our sole position in Robert Half. They're a temporary and permanent staffing solutions company. You can see we're just getting a lot of volatility. It's not really doing a lot. We bought into this breakout here. It wasn't an ideal setup because we just sort of came ripping straight back up from on the right side of this base, which is not ideal. We would love it to form some kind of a handle that would shake out some of the winners, but it didn't do it. So we bought it anyways. It's not doing anything wrong. It's kind of just coming back, testing its breakout point, a little small rally, testing the breakout point again, getting some support at this pink line, which is the 10-day moving average. I have a feeling in a good market this probably would have just taken off, but in this kind of market, it's really not acting all that well. I mean, it's not acting that bad, but it's being held down by the market. Here you can see the S&P, and it's kind of just trending lower here, and here we are, we're making highs. So it's got a high RS rating, 94, so it's outperforming all but about 6% of stocks. So that's where we are. No gains. We're slightly down. I think we're down 1.62%, but it's hanging in there, so we'll stick with it. And our stop is about at 5.5%. So we're not too, I think it's 115.58. So that is right. Let's see, 115.58. I can't really quite get it there. I think I actually have it right below. Yeah. On this day where it broke out of this little thing, our stop is right below. It's like a penny below this day here. So it really shouldn't break down into this area. If it does, it's probably going to at least continue down to the 50-day, which is the red line. So that's our one position there. So let's take a look at our ready list. We don't have a lot. A few of the stocks we had on Friday moved to the watch list because they broke down a little bit. This one's Golar Liquid Natural Gas. Again, it looks pretty good. It's let's go to a weekly chart. It's a little choppy. It's not one of these stocks that just tends to head up. It kind of forms a base and then another base and another base. So it's not the greatest movers, but it could. So, and we've had a few times in the past where you've had some nice just quick moves. So probably if this one does get a quick move and we get on board, we will take our profits and run. It doesn't have great fundamentals or sales at this point, so it's kind of one of the best of the worst. It have a strong RS, and it's just hovering around the breakout point, which was right here. Not really able to do much. We're also running into earnings, so we'll probably put this one on hold. And we'll see what it does over the next week. The next one is General Dynamics, which makes all sorts of aerospace defense products. This one formed a little bit of a wick. It's been just hovering around inside its buy zone, tried to break out, and came back to the top of that range on not a bad close. On these charts, we can actually see it closed in the 42% range. Anything over 40% is usually considered accumulation. So this one's okay. It's acting pretty good. The relative strength line is heading straight up. That's a great sign, even though it's only at 91. And this is the weekly chart. It has a history of making nice moves. So we could break out of this, especially if there is a more extended conflict. And militarily around the world, this could just one of the benefits of that. But we'll see. It's not doing anything wrong. We would have liked a better close, but that's what that is. I own this in my personal account. I didn't buy it in our account here just because I didn't want to add any more exposure. And I was in my personal account, I was at zero. I had no stocks. So I thought I'd add this a small position, basically a pilot position, and we'll see what it does. Let's go ahead and just do the last ones. That's the watch list. So we have a few names on this that are all, hanging in there. Most of them have high 90s RS ratings, like this one here. This is one of the few IPOs that's hanging in there. It's not basically just heading straight down. I'm trying to think if I can remember a name. Offhand, I can't think of one of the IPO names that are just all look the same, just heading straight down. There really is nothing. It's just volatile. It doesn't have anything set up, but we're just watching it because it is hanging in there. Hopefully, it does form some kind of viable spot. Next one is International Game Technology, IGT. This one we'll be getting in a little early if we can, because we're still forming the base. It's actually a pretty nice looking base here, and it's just kind of forming came up, kind of tested the bottom, didn't make a new low, which was a good sign. It got support at the 200-day, right at it. Sometimes it does that, and that's when you wish you were one of those people that buys right at the moving averages, but we don't usually do that. And so it looks like we're trying to, the buy spot would be right if it breaks above this, which is about 30.86. I have a little bigger range. I think we have from 30 to 31. I might change that just because we've gotten some more volatility, so we might be moving that up a little bit. But that's that one. Earnings are coming up too, so we might be putting that one on hold. Next one is Methanex. They produce methanol. And now this one's actually forming a really nice cup, and it's actually putting in the handle. And we like to see these little shakeouts like this, where during the day we come down. This one just closed in the bottom, but here you can see one. We come down, we shook out all the way to the 50-day, and then closed right back up, and then went straight higher after that. We're getting a nice volume coming up this side. Volume's declining on this little handle, so this is actually looking pretty good. So we're watching it. The buy will be right above this price here, which is about, what do we have it at? 52. We have the buy still over here just because we're setting up. I'll probably end up moving it, so we'll end up over here. So we'll see that change on Monday. The next one is Navio's Maritime Partners. Looks similar, cup with handle. And this one we have the buy at 31.64. Yeah, I have to move these back down. We're getting some volatility here, and the buy zones are moving, which is it's normal, because as the charts develop, you start moving the buy zones around. So we'll be updating that one also. And these are all on the watch list anyway, so they're not set up, so nobody's missing anything at this point. Next one is one of the rare stocks that's not in a cyclical. They're women's and men's accessory footwear and apparel company, Capri. Again, this one's just hitting some volatility right at the breakout point, and we've broken below it again. So this one keeps moving in off of the ready list and the watch list. So we're watching that. This one, next one, Cushman and Wakefield. This one was on our list and just had a really strong day 3 days ago. We had just put on the list, and unfortunately, when the watch list, it broke out. But just typical, it's pulled back, and we're actually a little below it. So we are back on the watch. Earnings are coming up, so I think at this point we may not buy it at all, even if the market was improved. We don't like to buy them in front of earnings. Next one, Ryan Specialty. This one's still just forming a base, a little too volatile, just too much back and forth going on. We want to see it kind of tighten up and give us some place to actually buy it. So that's still on the watch list. A couple more here, actually 3 more. Stifle Financial. This one kind of looks like Morgan Stanley. We broke out here, nice day, nice high volume, and the breakout just couldn't hold. And now we're down actually in the loss zone here. You can see in the reddish pinkish box here. So we just got up about 5% and now we're down. So we've had a 10% move, but would have given you not enough really profit to have wanted to sell, and now you're down, maybe at the level you would be taking your loss. So that's very common. The next one is American Financial Group. The RS is a little weaker here. It's okay. The company seems to has pretty good sales, especially earnings. Sales have been declining a little bit, but the margins have been going up. So it doesn't look bad on the weekly chart. We are getting the RS blue dot. So we are getting a new high on the relative strength line, and we're not making a new high. That's actually a very bullish development here. But we just couldn't break out. And even here, when you saw we got really tight trading, which we always love to see, it just couldn't break out. And it came down, broke down, and kind of rallied back. Really just not set up. So we're watching that one. And the final one is one of the, oops, that's not it, VAC, and that is Marriott Vacations. We're actually starting to see quite a lot of these, Hilton, Marriott, Chains Choice Hotels. They're all starting to show up on the high RS screens, even though this one's not great, but it's got a decent pattern forming, and some of them, this one hasn't already tried to break out and fail. Earnings again coming up. I think a lot of them are coming up. So we're just watching this, but we are starting to see, with travel opening up again, this sector kind of coming to life. Let's just finally take a look at the weekly. It's nothing to it's not very exciting. This one, it's just really not a lot going on. So we're just trying to find things that look halfway decent. This one, yeah, we might be taking this one off the list. It's just not really giving us much. It seems to be more of a trading in a range. So, but that's it. It's not a lot of merchandise. It's like going into the store and the shelves are basically empty. So that's it for this week. We'll come back next week and with more, and hopefully we'll have a better market environment. But no matter what, even if it's not, at some point we will set up with another fantastic buying opportunity where we can get more aggressive and start getting some nice profits built up again. So we'll see you next week. Okay, thanks.